All right, folks, here we are on Tuesday, November 30th. I wanted to take a look at Paysafe today. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Okay, so Paysafe, we've been charting this on and off for a while. As I feel that I need to mention for some reason every time we do Paysafe. I was wheeling it when it was BFT, that then became Paysafe, and then eventually just thought it was better use of time and money to stop wheeling it. But just incredible that at this point it's down in the $3. I mean, we keep looking for opportunities for it to make a shift, and I'm going to get rid of a bunch of this stuff because it's just not helpful. It's just kind of clutter at this point. If and when the price gets back up to these levels, we can put in some of these support and resistance zones again. But let me just talk about this, and then we'll knock this out too. Probably in the last video that we had done with Paysafe, I was hopeful that I was putting in a potential bullish movement here, that it could start to walk up this uptrend support, though at the time it was very, very nascent, right? It was just a few candlesticks old, and so those things can obviously reform or break very, very easily. And so that obviously it lost that and then has continued to dwindle down since then. So to my mind, if we come back out here some more, there's a couple of things happening. So one, there's still this 502 resistance. We'll leave that there for the time being. To the downside, there's not a lot to go off of, unfortunately. But what I would look at is if we put in sort of an auto-generated trend channel here, and just sort of pick out what we just looked at, where it most recently broke the uptrend support, right? From that point on, what I would look for it to do now that it's trending down again would be for it to work itself out of this channel to begin with. It's going to need to do that before it can really do anything else of value, or of value makes it sound like it's going to be a good outcome, and I don't know if it's going to. But what I would look for it to start to do is build one of these ranges again, right? It has a good history of building a lot of these ranges. I mean, this would even stretch back into about here, where it was just building itself in this range for several weeks, and then make a big move out of it, right? Which is what you look for. Consolidate over a period of time, break it, and then make the next movement. It did it up here also. But to me, what this looks like at the moment is it's trending down. I know that that's not earth-shattering, but that it's not yet starting to consolidate at a level, which is, like I said, just really unfortunate and really surprising for somebody who used to wheel this. Now, I don't know a ton of exactly what's going on that's causing all of the selling off. There might be a bunch of internal issues and who knows what. I'm purely just looking at the chart, but from my perspective, what I would look for it to do is break this downtrend, start to consolidate, and then you just have to wait to see where its next big move is going to come from. And these moves often come in the forms of gaps, right? This is just a big gap down. This is a big gap down. This is a big gap down. So those range breaks have tended to be really challenging to even sort of stay away from, because by the time it breaks, it's already, potentially opening down tens of percents. The other sort of more, I guess, conservative way to play that, especially in a stock that has a chart that looks like this, would be to wait until there's a clear break through the top of the range in order to make the move, right? So you could still get faked out in something for sure. So you could have thought, for example, that there was a range building here, and so you could have seen this movement out of the range, right? And this day, and this was just up a little over 1%. But on this day, it had gapped up, right, over 9%, almost 10%. And it could have looked like it was going to go for the range break there. But then it just quickly came back in. But I mean, the advantage here to at least waiting for it to go for the range break is if you were to manage your risk well and you were to say, okay, if this falls back into this range, I'm going to cut my losses, right? Then maybe you would have gotten in at something like 1270, and then maybe you would have gotten stopped out here at like 1237, maybe even 1225, something like that. But still, in the vast scheme of all the catastrophic losses that surely folks have endured over the course of holding Paysafe, that small of a risk, in the vast scheme of things, is pretty minimal and is pretty well controlled. And so to me, that's what I would look to do once this starts to build the range. If you do want to come in, if you're really, I don't know, have a reason to want to be long, or you feel strongly that you would like to be going long Paysafe at some point, to my mind, I would look for that range to break to the upside and then keep a very, very tight stop loss on there, probably indicating something like back into the range. Now on the EMAs, even at this point, because this gap down was so huge and then it's continued to move down from there, these EMAs are even very far from the price action. Like we talk about the closer to the risk that you enter your trade, the better your reward situation. In other words, if you buy a stock when it's really far extended from the EMA, right? The EMA is way down here and you buy it way up here. It's already super extended. Your risk to reward ratio is much better if you buy it on there, because you could just say if it breaks this EMA, or if it breaks at 34 or something, like that's my stop loss. And you have all this upside potential because it's sitting on your catalyst point. If you buy so far away from it, then your reward is potentially sort of cuffed because it's already extended so far from your entry point, or I guess your stop loss point, but your loss potential is much greater, because if your stop loss again is down here at a break of the 12 or all the way at the break of the 34 or something, then you have much more risk exposure there. So similarly here, this being so far away, there's just kind of like not an opportunity for that 12 EMA to provide a bullish catalyst to help sort of scoop underneath the price action and then help, reverse the trend. To my mind, in addition to a range break, I would look for that 12 support as well. Like here on this, right, you had seemingly a really good opportunity for these EMAs to provide support and to go ahead and throw some bullish crossovers, but because it came back down so quickly, and you see it did try to catch on the EMA here, but then as soon as it lost it, it confirmed it as resistance again there, and then just got trapped for several more days, and then never broke out of this range to even begin with. So this this is just sort of a video of I don't know where this is going, because this is insane where this has ended up, but those are the things to my mind that I'd be looking for. I don't really have an intent on coming in the near future, but again, if I did see some of those things start to take shape, range break to the upside, support over the 12 EMA, and the ability, my trust in my ability to risk manage this very, very closely, because we've seen how it can move, then I may consider it. But it's a lot of management, right? It's a lot of effort and trying to figure out exactly where this trend reversal could start to take shape. So that's just my 2 cents. And, otherwise, good luck if you're in this one. There aren't any other support levels to put in, because the price has never been this low, right? Back here, the low was 960. So, I mean, we're nowhere near that at this point. So, I wish that there was something else I could put in, but, like no point in even looking at like the Ichimoku cloud because it's just obvious what it's going to say. The same thing with the MACD. This is showing that there could be some bearish momentum that's dying down. Maybe it's going to get a crossover, but even when it does cross over, I mean, historically speaking, many of these have been like have had such a small impact on the price that that has been like relatively just kind of misleading, in my opinion. On the RSI side of things, again, it's just an obvious thing. Like with the Ichimoku cloud, yes, it's super, super in oversold territory. But as we see, I think that I had some sort of a back and forth with somebody about this before when it was so oversold down here. And I was like, just because it's oversold doesn't mean it can't just stay oversold for quite a while. So I would, I'm not super of the mindset of like something can't go lower. I would much rather, look to something that's on an uptrend and is moving really strongly and say, okay, well, maybe this thing can go higher, and then look for ways to support that. But I've never been good at catching a falling knife. I think it's, if there are folks that are really good at it out there, maybe look at some of their stuff. But to my mind, there isn't necessarily like, oh, this is super cheap and so it's worth buying. That to me has always been a fool's errand. I did pull up the unusual whales flow, but this just feels more like a kick in the pants. But 6 bearish trades, 4 bullish trades. These are the biggest option trades from today. And you see here, the big ones are several hundreds of thousands of dollars. And then there's a bunch of relatively smaller ones in terms of like whale trades. These are big money trades that are coming in. But overall, just not a lot coming in, period. So I felt obligated. I was looking back through video history and sort of seeing some that folks were really kind of clamoring for. So I felt obligated to come back in. I'm sorry I don't have something that seems a bit more, I don't know, thematic or concrete, but this has just been the story of Paysafe. Consolidate, sell off, consolidate, sell off, consolidate, sell off, and sell off, like I said, in sort of the harshest fashion, right? Just these huge gaps down where sometimes you might feel like you don't necessarily have an opportunity to even risk manage. So I just thought that I'd come in and just sort of say, like, to me, this isn't even in that consolidation period yet. And so there's probably quite some time left to go before it's even like considered to be, gearing up for another move. All right, folks, good luck if you're in this one. I wish you the best. I hope your trading week is going well, and I appreciate you watching. I will see you in the next video.